Plug it. Okay, okay. Close this window. Close the window. Yeah. Good evening, everyone. Good evening. I want to test both the feedback from on what on YouTube because we are streaming live. So I'll be sure that those on following on YouTube can hear us. So please, if you're on YouTube and you can hear us, if you're watching us live, please indicate if our voice if my voice is clear enough. If you can hear me loud and clear, please let me know because we want to move with the speed of light now. There is a lot to learn. So how are we doing? How many of you were at Trader First? Okay. We're not at Trader First. Okay. How did you hear about the meeting? Online. On the WhatsApp group or on Facebook? Okay, they're saying I can hear you, I can hear you. Happy to be here. Thank you, thank you, thank you. Okay, so please, for those joining us online, share the link. Everyone you know that you would be interested in this class, please share the link. And please advise them to join live, because once we're done with this meeting, we'll be deleting it from YouTube. Okay? So let's get going. So you're welcome. Welcome to TradingView. Some of you are here for the first time. Close this door for the sound. Some of you are here for the first time, and some of you have been here before. So we do this almost every month, because the whole idea, the whole reason why we set up this place is to help as many people as possible attain financial freedom, to help as many people as possible see the possibilities in trading the Forex market and to maximize it. There's a lot of money here. I shared a video. How many people watched the video I shared yesterday? About 7 reasons why you must not quit Forex. Okay, it was day before yesterday. Okay. So the possibilities available in the Forex market is enormous. It's too much. And one good thing about the Forex market that makes it better than any other business I know of out there is the fact that you're doing well does not mean another person has to suffer. If all of us are profitable traders, all of us can be making money every day. You understand? Unlike, let's assume we are all at maybe we're at Wuse Market. We have shops at Wuse Market. If you're making sales, that means me, I'm not making. You understand what I'm trying to say? If a customer is buying from you, it's likely that he's not buying from me. But in the Forex market, there is no specific customer. All of us can be making money at the same time. Nobody's, and everybody's happy. Everybody's doing well. Okay? So the opportunities available in the Forex market is much, is a lot. So that's why we set up this facility to help as many people become profitable trading the Forex market. And of course, we are in business. Okay? So what I'll be teaching us today is an introduction into the Forex, a full introduction into the Forex market. I'll be teaching from a handbook that we have here at TradeView. We also share it to you guys. If you need it, you can get it. We're going to be teaching you the basics, everything you need to know about the Forex, like from what is Forex to the point where we teach you one strategy out of the 3 strategies that we teach to our paid students, because we have a this what we're doing here is for free, but we have a paid platform for our students who are full fund, they are an account and trade with their system. Okay, so basically, yeah, you can count in one hand how many academies are organizing trainings like this. You understand? So what we're teaching you is from a handbook that we use, and we'll be teaching by tomorrow. By the time we are done with the basics, we'll be teaching you a strategy that you can go home and use for yourself and make money for yourself, even if you don't want to join the academy. Okay? So I want I just want to sample how many of you have traded the Forex market before. If you've traded, okay, you've not traded the Forex market at all. Okay, you traded. What level of knowledge do you have? For those online too, please. For those online, let's know the level of your trading. Are you an amateur, intermediate, or a professional? So go ahead. What's the level of expertise? Okay, between amateur and intermediate. Okay, you? Okay, amateur. But have you traded live before? Okay. How did it go? Okay, what have you traded live account before? How did it go? Okay. So what of you? What, have you traded live accounts? He said, wow. Okay. How was the experience? Okay, so what we have a lot to do today, and we'll be moving with the speed of light. Moving with the speed of light. So we'll start from what is Forex. We'll start from what is Forex. Now, most times when people hear the word Forex, somebody saying online, I traded, but I didn't enjoy it for lack of knowledge, as my teacher didn't even know it. Now, the truth is, let's be sincere. Let me tell you the truth. I've been in this industry for over 6 years. I've been trading the market for over 6 years, close to 4 years, full time. Because I graduated from school 2018, and I've been trading basically most of that time after I completed my internship, because I did a medical course, I'm a physical therapist by training. But even right from school, I just knew that physiotherapy won't give me the kind of money I'm looking for. So I started learning Forex while in school. Now, the truth is, because of the fact that most of the people you meet, if you meet 10 Forex traders, 9 of them are losing money. But because they don't want you to know they are losing money, they will hardly tell you the truth. So even a trader who is even struggling to trade can tell you that he's an expert in trading just because he knows how to place buy and sell, open and close a trade. He assumes he's an expert and goes about looking for who to teach. And most of them are making no money on Forex. Most times when people hear Forex, they usually, let's start from what is Forex. My writing is very bad, and I already told you I'm a medical person, so it's our right. It's our right. Okay? It was in final year that I began to, question some of my classmates. I just looked, somehow, everybody's writing was just bad. So we are trying to probe why. Why is it? So we now came to a conclusion that it was because most of the time, if our lecturers are calling notes for you, they don't send you. So they don't even say. So you have to just develop shorthand for you to be able to meet up. So Forex, most times people confuse Forex with financial market. When you see I'm trading Forex, somebody that's trading Forex can easily tell you I trade the financial market. In a sense, that's a lie. Because if you're saying you're trading the financial market is made up of many markets. The financial market is inclusive of the Forex market, inclusive stocks, inclusive indices or derivatives, inclusive cryptocurrency. So when somebody says I'm trading the financial market, unknown to them, what they mean is that they are trading all these things. But the truth is, not all the Forex traders are trading all these things. So Forex market is simply a component just under financial market. Financial market is an umbrella name for everything you're seeing here. Forex market being the biggest of them. So Forex market is the biggest market and is an $8 trillion market. Okay. I'll be switching between physical and online because people are following online. We have like 23 people online as of now. Okay, so I'm saying they traded for 3 years. I'm an amateur. Somebody says they traded live and blew the account. Normal. Okay, so uh, the Forex market is an $8 trillion market. What that simply means is that every single day, $8 trillion exchange hands between people. That means, how many of you have watched, what's the name of that? Squid Game? Have you watched Squid Game? Yes, Squid Game. Now, in Squid Game, they had a big bowl of money, $356,000, right? I can't remember the $356 million. Anyone? So, and the whole idea was at the end of the day, the winner of the game will take the money. Now, the Forex market, just assume, is a big bowl of money. And every single day, $8 trillion is exchanging hands between people. That means every single day, somebody somewhere is taking $20,000. Somebody else is putting 500. Somebody else somewhere is taking 1,000. Somebody is putting 2,000. Another person is taking $1 million. At the end of the day, the transaction that has taken place from all over the world, from within everybody trading the financial market, is $8 trillion. That's a lot of money. So that means that even if you're making every single day $1 million, the market doesn't know that you are even around. Take this camera this way so that it will face straight. So even if you're making $1 million every single day, put it in between this place here. Even if you're making $1 million, the market doesn't even know that you came around. So the opportunity to make money in this industry is huge. It's massive. You can sit here. Okay. It's much better now. Okay. Now let's move on. Let's move on. There's a lot to talk about, a whole lot. Now, the Forex market is a combination of two words, foreign and exchange. Forex. Forex. Okay? And like I already said, is the largest market in the world with liquidity of over $7 trillion, which is currently about $8 trillion now. Now, stock market is the second largest financial market, with New York Stock Exchange, leading with a volume of over 200 billion US dollars on a daily basis. Now, and the Forex market is the most volatile and the easiest to trade. Now, let me explain a basic history of the Forex market that will give you an insight into how Forex works. Forex market started as early as uh, uh, even what's it called? How many years BC? When they used to trade gold and silver. Because foreign exchange simply means you're trading a currency with a currency that is not your currency. It's that simple. If I go to these Malam guys and exchange dollar for naira, I've done forex. You understand? Those ones too, they also called forex, but what they are doing is physical forex. Okay, there's online trading forex, which is what we're going to be teaching. Okay. Now, secondly, so when those guys exchange gold with silver, what they are doing basically is also forex. Okay. Now, how money is made in forex is very simple. Assuming I travel to the UK, before you travel to, let's use US, so we can use dollar. If you're traveling to the US, you will not travel and go and spend naira. You definitely need to get some dollar and go and spend. Now, let's assume I exchanged 75,000 naira for $100, a $100 bill, and I traveled to the US. And I and immediately I landed the airport. I met a friend, an old friend, and the guy said, "Wow, so you're in the US now?" I said, "Yes." He said, "Come to my house. Instead of going to stay in a hotel, you can come and stay in my house." And I went to my friend, stayed with him for 5 days, 6 days, or 1 week, then came back to Nigeria the following week. And I did not spend the $100. But at the time where I was coming back to Nigeria, a naira is now 800. A dollar is now 800 naira. If I exchange that $100 back, how much have I made? Huh? Exactly. I've made 5,000 naira simply by holding on to my $100, right? So what you're trying to do in Forex is to trading in Forex, as the definition of trading simply means exchanging the value of a currency for another at a particular price and at a particular time. So both the time and the price is important. That's why any chart you see on Forex, on the y-axis is the price, on the x-axis is the time. Because the currency must be exchanged at a particular price and at a particular time. Are we together? For those online, are we together so far? Somebody is asking, can those online watch this again? No, you cannot watch it again. Sorry. Once we are done with the training, it will not be on YouTube, okay? I've already defined what Forex trading is, okay? Exchanging a currency with another currency at a specific period, specific price, and a specific time. So whether you lose or whether you make profit is called trading, okay? Okay, I've already done this illustration, so let's move. Now let's talk about trading versus investment. Most times when people trade the Forex market, you hear them, they call themselves investor. Tell you I'm an investor. And I invest in the Forex market. Those are lies. Trading is different from investment, okay? When you're trading, you're actively exchanging currencies, for profit. But as an investor, you are putting in the money and allowing the money to grow, allowing the value of that currency that you bought to increase in value. That's what makes you an investor, okay? But if you're in the Forex market, you're actively opening and closing trades, you're not an investor, you're a trader. Most people don't like that name, Forex trader. They like investor. They like, I'm an investor. Sit this way so you can see. They like that name, investor. They don't like trader. You are a Forex trader. Simple. Okay? So that's the difference between trading and investment. I've already explained that. Now let's go to module 2. We need to do module 1 because this is a 10 module course. This is a full course. I'm just giving you the brief explanation because we only have 2 days to do this. This is a full course that will likely take you 2 weeks, at least for the average student in our academy. It takes them 2 weeks to do this, but we are compressing it under 2 days. Okay, so you have to really be fast so you can follow up. You have to do module 1 to 7 today, at least. You have to do at least module 1 to 7 so that tomorrow I just know that I just need to teach you the strategy and you can go and practice it yourself. Is that okay? Fantastic. Somebody says, so how are we going to get the slide? It's a full book. You can always get it on the Telegram channel. It's always on the Telegram channel. So market trading sessions. Now, there are 4 market trading sessions in Forex. What a market session simply means is a time of trading based on 4 different time zones. For instance, in Abuja here, there are different markets. There's Utako market, Wuse market. There's just a lot of markets, okay? Same way we have 4 different sessions of markets in the Forex market. There are four sessions that make up the Forex market. We have number one, the first to open every day is the Sydney market session. Okay, the Sydney market opens by 22 GMT, which is about 11 p.m. midnight. 11 p.m. midnight, then closes by 6 a.m. Then the Tokyo session opens about 1 a.m. midnight and closes about 8 a.m. Then the London session starts by 8 a.m., closes by this is 5 p.m. Then United States session starts by 1 p.m., closes by about 10 p.m. Now, what you notice about these sessions is that they overlap each other, which makes it possible to trade Forex 24 hours of the day. So even if you wake up in the midnight, there's a market session ongoing. Now, one thing you need to, because most times the way I teach this, I found out that it was a bit confusing, so I want to stop teaching it like that. But I will attempt to explain it in the hopes that you understand it. Now, in every market, there are specific things that you're looking to buy. For instance, you can't go to Wuse market in search of building materials. How many have been to Wuse market? Wuse market, what they normally sell there are, clothing, shoes, jewelries. You understand? But there are some markets that you know that if you're going there, majorly what you're looking for is foodstuff, like Otako market. Majorly what they sell, foodstuff. You understand? Now, for all these market sessions, there are currency pairs. There are currencies, not currency pairs, because I'll get to pairs now. There are currencies that are much more easily traded during those sessions. Why that is so is because during this Tokyo session, during this Sydney session, this 10 p.m. to 6 a.m. is actually their daytime. This is their 8 o'clock to 5 p.m. You understand? For Tokyo, this 1 p.m., 1 a.m. midnight to 9 a.m. in the morning is actually their 8 a.m. to 5 p.m. You understand? Same thing with London time, same thing with United States time. This is actually their 8 a.m. to 5 p.m. Now, what happens in any economy between 8 a.m. and 5 p.m.? That's their regular, that's when they release economic news, that's when they are making policies, that's when their economy is active. People moving into the country, that's the time they are changing currencies, that's the time they are trading currencies. You understand? It's like their active time. So that's why their currency is more active during this period. So you will notice that for sessions like the for United States US session, during US session, you notice that currency pairs that have the USD, of course, US dollar is their major currency there, right? Currency that have USD, CHF is very active. This is Switzerland, franc, franc, anyone? I know it's FROA, franc or something. Now for the London session, currencies like the GBP, the Great British Pound. Currencies like the Great British Pound is very volatile during the London session. You can sit here. Emmanuel, you can sit here. Currencies like the GBP during the London session, very much volatile. Are you with me? Now, during the Tokyo session and the Sydney session, because they are basically in the same zone, currencies like the New Zealand dollar, the JPY, which is Japanese yen, the AUD, yes, Australian dollar. Very much volatile during this period. You understand? Now, but that does not mean, please take note of this. That does not mean, yeah, Victor, welcome. That does not mean that the only currency you can get during this period is only these ones mentioned. What I'm trying to explain is that these are the currencies that are much volatile during this period. Is there any confusion there now? Any confusion online or offline? Any confusion so far? Are we good to go? Are we good to go? Fantastic. Now, there's something called best trading session, or we call it market rush hour. That's in between the close of London session and the open of US session. Remember, I told you guys that London session, because of course we have the same, we're using the same time zone as those in the UK, those in London. You understand? Although some parts of UK are like 1 hour ahead, but we're basically using the same time zone. Okay? Now, at 4 p.m. thereabout, their market is closing. And 1 p.m. US market is actually opening. So in between the open of the US session and the close of UK session, both markets are open. Is that correct? One is closing by 4 p.m. The other one opened by 1 p.m. So in between 1 p.m. and 4 p.m., both of the markets are open. Is that correct? Any confusion? Good. So this period now between 1 p.m. and 4 p.m. or 5 p.m. thereabout, when the US UK session is closing, is a very busy period in the market. It's called market rush hour. You know what rush hour means? When around 2 p.m. where everybody is busy. Some are going to eat food, some are going for break. Market rush hour. Some are even going home, closing out from work. You understand? So during that period, the market is very highly active. A lot of activities are taking place in the market. A lot of players are in the market. You understand? Now, what moves the market? How many of you have seen a Forex chart before? You know what? You've seen Forex charts, those zigzag lines. You understand? Now, one of the questions you need to ask yourself is, why does this market move the way it moves? There was this question, Mr. Ijimi asked during the trader fest. It was like, I mean, there are two directions the market can go, up or down. Why is this so difficult to predict? You understand? The market only has two directions. It can only go up or down. Why is it that hard? It is because of the players in the Forex market. It's because of the people that makes the market move. What moves the market is what we call volatility. There's no light. This is inverter. That's why we're not using the AC. So please bear with us. What moves the market is volatility. Volatility and liquidity. Those are the two things that move the market. For instance, now, all of us are in the Forex market. Let's assume we are all players in the Forex market. Have you watched a tug of war? A tug of war. You've watched tug of war. Excellent. Let's say we want to do a tug of war now. If Victor here, Victor, this guy here, and this my chief here, if the three of them are on one side, and me, this young lady here, and this guy here are pulling on the other side, which side do you think the rope will go? Why? Which side do you think is like this? Sound is cold. You can open the windows now. So which side do you think it will go? Okay, do you know what? Let me give you another instance now. Let's assume it's him here, him, then him. Okay? Then this guy, and the lady there. So where is he going to now? So it's a no-brainer. It's very easy. Okay? What happens in the market is the market moves to where the money is going to. The bigger money is going to. The market moves in the direction of the people who have the bigger money. So it's not really a product of number. It's a product of quality, not quantity. You understand? The market moves the direction of quantity, not quality. So even if all of us, like from this side down, what we have is 10,000, 10,000, 10,000, all of us. Then these people here, just these 5 of them, this one has $20 million, this one has $3 million, this one has $4 million. Where do you think the market will go? It moves their direction. So the market moves to the favor of quantity, not quality. You understand it now? So that is why the big players in the market are the big banks, the hedge funds. These are people that are trading with billions of dollars. This one, somebody here in Nigeria will fund $1,000. He thinks he's doing well. The market doesn't even know that your $1,000 is existing. You understand? That's why it's a very grave offense in the US. In fact, in all the countries where there's something called inside trading. When they release news events, when they release economic data that influences the value of a currency, okay? If you have a cousin, or if your brother, or if any of your relative trades that news in such a way that it makes them a kind of money they should not make, is a jail term, is a crime that can put you for a jail for life. Somebody like Fed Reserve Chairman, Powell, if for any day his wife or his child or any relative to him trades a news event, let's assume they want to announce an economic data that will indicate that the value of the dollar is going to drop, and his family member went to sell the dollar few minutes before the news happened, the guy is in for soup. Then how would they know? Why not? Why would they know? In fact, even he himself cannot trade, because you can't be trading when you want to announce a news and you went to go and take a position for the news before it happens. It's called inside trading. Insider trading is a lifetime jail. They will arrest you. You can't do anything about it. You understand? So it's really what's it called? The market moves to where the quantity is. Okay, that's what I'm just trying to explain with all these examples I'm giving you. The market moves to where the money is. Okay, moves to quantity, moves to quality. Sorry, not quantity. Now, let's talk about currency pairs and assets. I already told you that in trading, you cannot be trading, you must be trading something against something. You cannot be trading, it's only in Nigeria that we are trading Naira against Naira. Nigeria is a very silly country, I tell you. You're paying 2,000 to get 5,000. you're trading Naira. It's a pity, I'm telling you. But on a normal day, if you're trading a currency, you're trading a currency against another currency. You understand? So if you're trading USD, you're trading it for Naira, or if you're trading Euro, you're trading Euro for dollar. Okay? Now, so no currency is traded in isolation. On that note, there's something called currency pairs. Currencies are traded in pairs. Okay? So for you to trade a USD, it must be attached to a currency, either a dollar, the Canadian dollar, the CHF, the JPY. Let me just give you the main currencies in forex trading. Okay, there are literally hundreds of them, because basically every country has their own currency, and most of their currencies is listed on the forex market. Okay, but these are the major 8 players: the USD, number one; GBP, Great British Pound; CHF, Switzerland franc; JPY, Japanese yen; AUD, Australian dollar; CAD, Canadian dollar; NZD, New Zealand dollar; and which one have I not mentioned? Euro, yeah, and the euro. Okay, so these are like the 4 major currencies. Okay, when you interchange this currency within themselves, you have up to 28 currency pairs available for trading. When you interchange, maybe use USD CHF, USD JPY, by the time you interchange it within themselves, you have close to more than 28 currency pairs. Okay, so that means if you're trading one against the other. One question that people ask me most of the time when I teach this is, does it mean that I will have to have this currency to trade it with another currency? The answer is no. When you set up an account with a broker, which I'll explain what a broker is shortly. When you set up an account with a broker, it is assumed you have all these currency pairs. It's assumed you have all these currencies, even if your account is in naira. But most times accounts are usually in dollars. Okay, so you deposit, they change your money to dollars. So even if your account is in dollars, you can trade any of the currency pairs. You don't need to buy anyone to trade. It depends on anyone you want to choose to trade. You trade it. Is that okay? Any confusion at this point? Any confusion at this point? Can we move on? Okay. For those that are just joining us, this is a 10-module course. We are compressing it into 2 days. Okay, let me explain base currency and quote. We're compressing this 10-module course, which is usually like a 2 weeks tutorial, into 2 days. Now, for every currency pair, there is a part of the currency that is called a base currency, and there's another called the quote currency. The base currency is the actual currency that you're actually trading. The base currency is the actual currency that you're actually trading. You understand? Because each currency pair has a value. I used to go very deep into teaching this, but I found out that it confuses more people. So I won't go deep into teaching how to calculate the values. Okay. For instance, Euro USD is currently on, let me check the current value of Euro USD, is at 1.0915. Euro USD is currently at Euro USD 0.1915. That's what I said, right? Is this what I said? 0915, right? Okay. 0.0915. Okay. Now, is this correct? Ah, I was wondering because I know it's the 1.0915. This is the current value of Euro USD. Now, why I told you guys that this is the main currency you're actually trading is because If the value of euro goes up, this value goes up. If the value of euro goes down, only euro, not euro US, only euro, then this value goes down. That's how currency pairs work. So the actual currency you're really trading is actually this first one, but you have to trade it against another currency. And that thing worthy of note is you are not looking to make euro, you're not looking to make GBP, you just want to make money. So it doesn't really matter the currency pair, because some people, these are questions I usually get when I teach. Some people will be like, okay, which currency is the best one to trade? My answer is the one that makes you money, is the one to trade. You understand? Because at the end of the day, what you want to make is money. Whether it's GBP, whether it's AUD, at the end of the day, you want your capital to increase, right? That's it. So the first currency is called the base currency. The second currency is called the quote currency. So on that note, you can have different currency pairs: Euro CHF, Euro CAD, USD JPY. You can just have different GBP CAD. You can have different currency pairs available for your trading. Okay? Now let's go. Now there are types of currency pairs. There are different types of currency pairs. There are major pairs. There are major pairs. Major pairs are simply pairs that have USD as either their base or quote currency. So any currency that has either USD has USD as either base or quote. You already know what I mean by base. Base means is the main currency. Quote is the currency that you're trading it against. Okay? So any currency that has US dollar, USD CAD, in this case, is the USD base or quote? Base. USD JPY. USD, what is it here? Base. Euro USD. What is it here? They brought like. What is it here? Quote. NZD USD. What is it here? Quote. Fantastic. So any currency pair that has a USD as either the major or minor pair is a major currency. Now for minor pairs are pairs that does not include the USD, but at least includes one of the most three traded currencies. The most three traded currencies aside from USD. USD is the most traded, okay? Aside from the USD, the other currencies are JPY, GBP, and Euro. So any other currency that has any of this is referred to as minor pair. For that, we have examples: Euro CAD, minor pair; AUD NZD, minor pair; GBP CAD, minor pair. Are we good to go? Understood? Fantastic. Now, exotic pairs. Exotic pairs are pairs that cross any of the major currencies with currencies from other developing countries. So when you cross currencies like USD, even USD to the Naira is an exotic pair. When you cross USD with South African Rand, exotic. Okay, go ahead. I have a question. Okay. Master. Okay. Under minor pairs? Yes, it's the minor pair. It's a minor pair because most brokers This minor and major is relative to brokers. For some brokers, they will even list this GBP card under major pairs. This is just like a textbook definition of it. You understand? In practicality, a lot of brokers classify, some of them say, they classify both minor pairs under major pairs. It's relative, but this is like the textbook definition of it. You understand? Okay, so let's move. Now, there are terminologies that you must take note of in Forex. Of course, we know buy. When somebody says, I'm buying Euro USD, it simply means you're buying, you're entering a trade hoping that the price of that currency pair would go up. You understand? That's the definition of a buy. When you're buying a currency pair, you're entering a trade in the hopes that the value of the currency pair will go up. You can sit. Please help them bring that chair outside for me, please. That chair behind you. Here, he will be here. He's taking the camera. So. Keep going, keep going. Okay. So, welcome. So, when you buy a currency pair, it simply means that you are purchasing a currency pair in the expectation that the price will rise. Remember, I told you already, because I don't want this to confuse you. When you're buying, let's say you're buying Euro USD. When you're buying Euro USD, you're simply hoping that the value of Euro USD, which is currently 1.0195, you're hoping that this value goes up. Maybe it becomes 1.0925 or 1.1210, which is like a lot of money here. We'll go into pips and how to calculate distance shortly. Okay? Are we together? Fantastic. Now, sell. When you sell a currency pair, you're simply hoping that the price of the currency pair would come down. Okay? Now, long. Long is simply another word for buy. Short is another word for sell. So you hear people say, I'm going long on Euro USD. It simply means they are buying. If they say, I'm going short on Euro USD, simply means they are selling. Now, there's also bulls and bears. Bulls are simply buyers in the market. Bears are sellers. Especially in the crypto, you hear they will say it's a bear market. We are in bear markets now. It simply means there are more sellers than buyers. And the reason why they use bulls and bears is when you're being attacked by a bull, the bull is trying to use the horn and launch you into the air. If you watched all those bull fights, I don't know why Americans love risk. I mean, they just don't like their lives. You see them, they will bring white this thing. They will just be playing, just be playing, rough play, and people are watching. So the bull is trying to use the head, launch you into the air. So that's what buyers do in the market. They want to take the price, move it up. But for a bear, the bear wants to hit you into the ground. Hit you into the ground, hold you there, and compress you till you die. So trend simply means the overall direction of the market. Okay, it's the direction that the market is going, whether it's going up or down. Okay, now uptrend is when the market is going up, downtrend is when the market is going down. That's simple, right? Fantastic. Now there is another one called a range market. A range market is when the market is going sideways. When the market is not going up, it's not going down, it's just going like this. you say the market is in a range or it is consolidating. Okay? Now, broker. For you to trade the financial market many years ago, you needed funds like $20,000 and above. I think at some point it was about $1 million for you to directly play in the Forex market. Because remember, I told you guys this is a pool of $8 trillion. A pool of $8 trillion. So for you to play in that market, you must have some money, some good money. But have they taken the light again? So some people came up and decided, okay, instead of making these people suffer to get this money, why not become an intermediary between them and the market? So that's what brokers do. Brokers are companies that interface between you and the market. So you can't just go directly and start trading with market. So you need a broker. Okay? There are many, up to over 65 brokers currently in Nigeria, of which 90% of them are quack. Okay, so you need a broker to actually trade the Forex market. Okay? And there's a lot I can tell you guys about brokers, but this is not the time for it. Okay? So you need a broker. Any question on that? Any question on that yet? Any question? Any question? So let's move. Now, leverage. Now, leverage is something offered by brokers. What a leverage simply means, like I already told you, you needed big money, like $1 million to start playing in the market, start trading in the market. But brokers offer you something called leverage. Leverage is anything that makes your life easy, right? So for instance, you say you have $100. They can offer you a leverage of, let's say, a leverage of 1:200. This simply means for every $1 you have in the market, they give you $200. Not like they give you, they are not, they present your money in the market as $200. Every $1 you put, they present it as $200. Are we together? That's what a leverage simply means. So that way, you can have a $200 and on the market it's appearing as this is $40,000, right? 200 times 200 is how much? Is it 4,400, 40,000? 40,000, right? 40,000. So in the global Forex market, your money is being represented as $40,000. You understand? That's what the leverage is. Okay, so they can some brokers can give you 1:100, 1:200, 1:300, 1:500, 1:1,000. Some even give as high as 1:2,000. You understand? So every $1 you put, you have as your capital, they are representing it in the market as $2,000. Okay, leverage is a two-edged sword. Is a two-edged sword, yes, because it can hurt you and it can also make you good money. Okay, the higher no need, it will confuse you. Don't worry, let's not go there. Don't want to confuse you. You know, most times when I do trainings like this, I learn more of what to teach and what not to teach. Because I found out that at some point, I might end in a bid with a sincere heart to explain it, I might confuse you. So it's better I just give you the basic that you understand, and then probably when you're all doing your own practical trading, it becomes much more easier to, understand these things for yourself. Okay, you can sit there. Now, let's move to module 3, types of traders. Now, there are different types of traders. And the reason this is so is because not every trader we're all different. One of the mistakes, let me tell you one mistake that you need to avoid in trading. We are all different. Not every one of us loves taking risk. There are people here who take more risk than others. There are also people here who don't just like taking risk. When I started my Forex journey, let me even tell you what inspired me the most. Sam, please help me open that window. That last one. What inspired me the most to take my Forex journey serious? Because I was a trader. I told you guys, I started trading from campus. I lost my pocket money, lost a lot of money. Then after 2 years, going to the third year of trading, I was still not profitable. I knew a lot. As at 1 year of trading, I already knew everything. When I knew everything, I had watched videos. If I show you my catalog of videos I downloaded from YouTube, it's over 15 gig. More than 15. What's 15 gig? Videos watched, followed every single person you know on you. Just these new ones now. Since I started making money, I stopped watching a lot of junks. Aside the people now you know now, there's no one I didn't watch every single video. Some had up to 500 videos on their YouTube. I watched everything, but no money. I was still not making any money. So, what inspired me the most was one day, my brother showed me one guy on Telegram. Said this guy is selling one robot like that. That I should be I that the results he's sharing, I should go and see it. So I went to the guy's page. I was like, every day the guy will post result $1,000, $2,000, 1,000, 2,000, sometimes 500 every single day. So that was what it got my interest. I was like, this there's money in this thing. No, I don't know how this guy is doing it, but I'll need to do it too. So that was when I started, okay, let me just give this thing more time. I started refining my skills. And as at the time when I took it serious, I started to now refine my knowledge to the point of profitability. This guy loaded an account of $10,000, posted it on the channel that which he wants us to keep him accountable, that he wants to grow this $10,000 to 100,000 using his robot. I thought, no problem. Our own is just to be seeing results. No be so. So every evening he will come, he will post results, post results. So some days I will not even look at what he's sending. So after like maybe 1 week, I'll come, I'll see $10,000. The money is now like 15,000. I'll be like, wow, that's good. That's good. I'll watch again, 15,000. After like 1 week, I'll come back. 15,000 is now like 25,000. Same account. And the way he does it, he will share you not like screenshot, video. He will show you a video, be scrolling, you will see the chat, the trades opened, and the amount, and you see it's a live account, not demo. This account moved from 10,000, 25,000, became 50,000. From 50,000 became 100,000. He now changed the game. He said, let's watch now. He's going to take his account from 100,000 to $500,000. This I'm talking is in dollars, or not naira. This guy moved the account in my face, moved the account from 100,000 to $500,000. From 500 to 700,000, he withdrew 200,000 in our face like this. Placed the withdrawals, gave us, we were seeing screenshot live and direct. Withdrew 200,000, the account was back to 500,000. He moved this 500,000 to $1 million. Moved it to $1.2 million. That was when he stopped sharing results. That was when I said no. If not die, all die, not die. That was when I said, all die, not die. That was when I knew, no, this thing is not play. And the good news about it is that I met, because then, I now started, I got interested, so I started selling some of his robots for him. So at some point, because of the way I was marketing, the guy really liked me. He really liked me a lot. Then this guy is a ghost. Like, if you type his name on Google, you not see anything. Nothing. Only his account number. That's the only name. Nothing else. No, there's nothing about him online. Ghost. So this guy said, I told him that I wanted to meet him. I gave him he gave me his private number. That was the first level. I was like, wow. So I called him on phone. We talked a few times. Then I told him I was in his city. I don't want to mention the city. So I was in his city during that time. So I told him I wanted to see him. So he said I should come. I went. We met at ShopRite. The city had ShopRite. So because of the level of, people like that, they don't come out anyhow. They come out like masquerade. So I was inside when he told. I was inside because we wanted to buy wine. I went there with my friend. I wanted to buy wine, then give him a wine and things like that. So I called him when we were inside buying the wine. I told him that we're already here. He told us no problem that he's here. That where are we? I told him where is he? Any year he want, he will come and know. He said no. That we tell him where we are. I told him okay. That we are coming out now. That he will see us. Then when we now came, we stood outside. He now called again. He said, where are you people now? We told him where we are standing. He said, what are we wearing? He now said, okay, that we should look. He's by the right, that we should now come. When he has confirmed that we are not EFCC, we are not. So now come. So what inspired me the most was the fact that this guy's English is not even a polished. The English they used to call is and was. He wasn't even just an Igbo man who used to sell building materials and somehow started learning Forex. I was first shocked because I was so sure that this guy doesn't know this Forex more than me. That was my first shock. My first shock was that this guy doesn't know where will you sit now? You can come and sit with him. I don't know how you're going to see the TV now. That's why I should come early. By tomorrow, you guys should really come early because welcome, sir. Okay, please bring that down your seat. You're welcome, yeah. Don't worry. All right. So that was the day I made up my mind that all die, not die. That whatever this guy knows about this Forex market, I will know it. He shared us some stories when he started, how he shared a very funny story. One particular day, he had about $10,000. I don't know what he was doing. So he blew the $10,000. And why he was why he was still crying that he lost the $10,000, according to him, it was raining very heavy. Then thunder struck and struck the laptop. He said this one is complete case of village people. But somehow he didn't give up. I mean, so it's inspired me. I was like, this guy, there's nothing. I mean, this guy was just too okay. You understand? Then when this not now when people are driving GLK, I mean, then he bought his own tier leader. That was when GLK was not even much here in Nigeria. Talking about 2019, 2020. Yeah, clean one. So it dawned on me that there is money here, and whatever that will bring out that money in this market, I'm aiming for the long term. So there's money to be made. So back to our lecture. So there are three types of traders. There are scalpers, there are swing traders, there are day traders. This all depends on the kind of person you are. Before, when I started, like initially, of course, everybody starts like that. Once you start trading, you just come into the market, you just place, you don't do anything. You have made $5. You feel like it's easy like this. So I can remember after I attended my first seminar, after the guy taught us, then he told us to download MetaTrader 4. I should just practice, just play around it. So I downloaded MetaTrader 4. Then I placed trade. I noticed this what's it called? RSI indicator. So I noticed that if it's going up, the market is going up. If it's coming down, the market is coming down. So I was just, if he put head like this, I sell. If he put head up, I buy. So after a few days, it was going well. I called the guy on phone. I was like, is this what you are saying that is hard? I told him, this thing I'm looking now, if it's going up, the guy just laughed. It was after 3 years I understood that laugh. It took me 3 years to understand that laugh. So it all boils down to what kind of trader you are. Because when I started, I used to be I used to take a lot of risk. I can take risks, use the $1,000 account, raise it to 5,000, raise it to 10,000. Very happy with myself. But after a while, I found out that that style of trading is not sustainable. Because as a businessman, you find out that cash flow is more important than cash. You need cash flow more than you need cash. You need a system that you are sure that every day this thing is coming. But if you place emphasis on cash, the days where you don't have cash, you will suffer. So I found out that that style of trading, it will make me money, but when it blows me, it's terrible. It brings me to the types of trader. For people, there are some people that are more of scalpers. They love just going to the market in and out. Once the market just moves small, they put a high lot size, collect trade, move, collect profit, move. You understand? Those are scalpers. Okay? They just want to make money from every little move that's happening in the market. For instance, this is like an example of a chart. So they want to buy from here to here. Then they sell from here to here, buy again from here to here, sell from here to here, buy again from here to here. That's a typical scalper life. And there are some people that are cut out like that. They don't mind. But there are some people, somebody like my other brother started trading before me. But currently, I trade much more than he does right now. But then I used to do more of scalping. He would tell me that he can't even do this thing I'm doing. That if he places a trade, that his blood pressure is tied to that trade. As it's going up, his blood pressure is going up. So I found out that as at then, I was more of a scalper than I was using any other style. Okay. And it lasted for a while. Then at some point, I found out that, okay, I think I just need to be swinging. In fact, it was when I started swinging that I became profitable. Now, I'm not saying there's anything bad in any of the methods, because even currently now, I no longer swing. I'm actually day trading. But I started making money when I became a swing trader. When I started making money from the Forex market, like real money from my own personal trades, was when I was doing my internship. When I was doing my internship, they were paying us 130,000 per month. So as at then, at least there was money. I wasn't trading under pressure. You understand? Because that's one to maybe tomorrow I'll give you guys advice based on if you want to start off trading, how to start up and not make the kind of mistakes I made. One of the mistakes I used to make then was trading for a living. It's only trade that is giving you money for food. There's no other extra. That's if you don't make money from trading, you will not eat that day. Because immediately I finished school, even before I started internship, you're welcome. I was attaching to one guy's office. The guy has an office, he's my brother's friend. I will attach in his office, and I had one small table. I'll go there every morning with my $50 account. I'll trade some days, some good days, you come back with $5. Some bad days, you will lose $10. So at the end of the month, you find out that if you calculate your profit and your loss, you are even losing. Because that was like my only source of income. There was no other way. You understand? But when I now started my internship, that was when I was no longer under pressure anymore. So whether I trade or not trade, I will make money. So that was when I began to conduct better analysis. My analysis was not based on pressure. If I don't see any trade, I don't take it. Because a swinging style of trading is a longer term style of trading. You understand? It's a longer term. When you enter it, unlike this guy that is entering buy here, sell here, buy here, sell here, you're waiting to enter buy here, then wait till whenever the market goes to when you think it's about to start selling, then you sell. So a swinger can open a trade and the trade will be open for 1 full week. You understand? But a scalper in 2 hours, in 1 hour, in fact, seconds, open trade, 15 minutes, he closes it out, profit. You understand? So that's, I became profitable as a swing trader. Then, before I now started day trading. When I started day trading was when I became a full-time trader. When after I finished my internship, I went full-time trading. That was when I became profitable and I started using day trading. Because as a swing trader, I wasn't doing any other thing. Like, if I place a trade, what will I be doing with my time? And I wasn't planning to look for any job. You understand? I wasn't planning to work in any hospital. In fact, 80% of my classmates right now in the UK. But I knew I didn't want to go that path. So what will I be doing with my time? I rather just take time to trade. Is this for sitting? Okay. That thing will scratch. Okay. Don't worry. Okay. Okay. So all the styles of trading can actually make you money depending on your own style. Okay, you just find what works for you. Because at the end of the day, profitability in trading is finding out what works for you. For some of you here, you might have a 9 to 5 job. You might not have the time like us to stay in front of our laptop. So even if we teach you a strategy, charger, you find charger. Please confirm that this one is working. Where's my phone? Okay, so please, uh, for those online, if you, okay, okay, my voice is loud enough. Okay, sorry, the battery for the microphone died, but we're back now. We have 32 people following online, so we're back now. So now there are types of market analysis, different types of market. I will rush now. I told you guys we have a lot to do, and I want us to close at least latest 4:30. Okay. So there are types of market analysis. Analysis simply means you trying to use different kind of approaches, signs, strategies, indicators, confirmations to predict where a market is going to go, the direction of a market. You understand? That's the definition of an analysis. Okay? Because you just need to predict whether it's going to go up or down. So whatever method you apply to come to that conclusion is what is called analysis. So on that note, there are three different kinds of analysis. There's number one, which is technical analysis. It's the use of market data, structure, and history. Okay? You're using market data, you're trying to go back to the chart, look at the behavior of the chart over, let's say, the last year, last 2 years, and you're trying to predict what the market will do based on what the data is telling you. Is that correct? That's for technical analysis. Now, for fundamental analysis is when you use data from news events. Like I told you, when they release economic data from the US and, in fact, from any country at all, it affects the global market. Because, for instance, if they say that the interest rates for for US companies are increasing, there will probably be more investors. More people will want to invest in the economy because of the market will yield better interest for them. You understand? So all these things, all those factors are what affects the that come under fundamental analysis is the use of news, you understand, to make a trading decision. Now there is sentimental analysis. Now this is the use of data from the players in the market to make a trading decision. Now this is simply when you check things like, I don't want to go more technical, okay, but when you look at things like the length of a candle, the number of candles, those are sentimental analysis. You are trying to check, are there more buyers in the market or more sellers? You understand? That's like the simple, are there more buyers or more sellers? And you're trying to make it a trading decision based on that. That's sentimental analysis. Any question? Any question? Now, there is also discretionary trading. This is a style of trading where you're just trying to use every tool available. You're combining any one to make a trading decision. This can also be based on experience. Sometimes 50% of my trading is actually discretionary trading. Because based on experience, there's some things I'll see on a chart that you likely not see. I was teaching some of our students here this afternoon. I shared with them some very, very, very terrific stuff that most traders don't even know that is happening in the market. So sometimes when you use experience like that to trade, discretionary trading, okay? Now, there are types of trade. Do I need to explain this? No need. But let's just rush through. Instant execution is when you open a trade, immediately the broker puts you into the trade, okay? Execution on request is when you put things like pending orders. Okay, there are orders called pending orders in the market. I don't want to explain. We are rushing. Okay, execution by market is when a broker makes a decision, based on your trade. Okay, for instance, where you hit stop out, when your trade becomes stopped out because of low margin. I will explain that shortly, maybe sometime tomorrow. Okay. Now let's go. I've already explained what a broker is, right? Any question on brokers? Okay. Good. So this is where we might just spend the bulk of the time because this is like the most technical aspect. Now the question now is, everybody now, your brain should be sharp because if you miss this point now, if you miss this point now, no sir, I'm working now, working now, working, working. So if you miss this part now, you've missed a lot. So please, everyone, let your brain be sharp. Okay, this is new one we bought. Okay. Now, a pip in the Forex market is called price per interest point, or some people call it percentage in profit. That's how we calculate money in the Forex market. Every industry um, has their own unit of measurement. You understand? Every industry has their own unit of measurement. You understand? For a tailor might tell you, okay, this is 5 centimeter, this one is 3 centimeter. You understand? In Forex, measurement in Forex is there are actually 3 units of measurement. There is pip and there is lot size. And there is also TP and SL. But we'll come to that. So we're starting with pips. Okay? Now, if you notice in Forex, when you look at prices of currencies, there are usually two different kind of currency prices you will see. Those with 4 decimal points, and those with 2 decimal points. For those just joining us, my handwriting is very bad. I already explained myself, so you can ask them what I said. so so those with 4 decimal points and those with 2 decimal points. For those with 4 decimal points, we start with it because that's like the most popular ones. You will see a currency price that looks just like this and usually has a last figure here, which is called a pipette. It's called a pipette, but in the calculation of trading, we don't include it, okay, so that it doesn't get confusing. So you might see on your phone that it looks like it has 5 decimal places. Our interest is in the 4. We are not interested in the last one. You understand? So just ignore all these small ones you're seeing. Our interest is in this one. Is that okay? Good. Now, for those that have 4 decimal places like this one, 0.8680. 1 pip. If I say this currency has increased by 1 pip, that simply means that this last currency this last value has increased by 1. So plus 1 pip of this is equal to 0.8681. If I add 2 pips, what's the value? 83. If I add 12 pips, what do we have? 0.86 what? 95. 0.8695. If I say it has increased by 125 pips, for those online, please drop your answers too. Somebody says zoom the board. Okay, the board is already zoomed now. Add 125 pips. No. 0.8820. Any other different answer? 0.8820. 0.8820. That's it. So on that note, we can now comfortably say that 2 pips, okay, let's start from 1 pip. We can now say that 1 pip is equal to what? 0.0001. Are we correct if we make this assumption? We're correct. In Forex, yes, for 4 decimal. 2 pips is what's the value? 0.0002. 12 pips, what's the value? 125 pips. Is this easy to understand? Fantastic, right? Now, let's go into the ones that have 2 decimal points. Now, these are examples of the ones that have 4 decimal points. I already explained to you. This is it. So this is the pipettes. All these small ones you're seeing here. These are the pipettes. This place is quite hot. Sorry, they took the lights. All we're using now is inverter, so that's why we're not using the AC. But tomorrow we hope for better. So this values you're seeing here is the pipette, so it's not used in calculation. So our focus is on these 4 decimal places. Excellent. Any question? If you're confused, please ask question. It's okay to be confused. It means your brain is trying to process information. So any question? Are you lost? Okay, not yet. Okay. So I already told you guys, okay, the 4 decimal place, the index is called a pipette. Okay, I already explained all these things. You people have access to this document too. If you're not on the WhatsApp group, on the Telegram, it's already on the Telegram. You can download it from there. Okay, so let's go to the ones that have 2 decimal places. Now, worthy of note is the fact that the ones that have 2 decimal places, most of the time, is the ones that have JPY. Currencies that have JPY are the ones that usually have, two decimal places. Actually three, but like I told you, you ignore the last one. Okay? So how these ones are calculated is very simple. Let's take this one, for example, 94.58. 94.58. Now, to add 1 pip to this means the new value will be 94.59. To add 2 pips to this, what do we have? 94.61. Now, to add 12 pips, what do we have? 94.73, that's correct. 94.73. To add 125 pips, what do we have? He said is what? 95.98. That's correct. 95.98. What if we add 1,250 pips? What do we have? What do we have? What do we have? One or what? No. Wait. Let me do my own calculation to be sure. Okay, call it again. Okay. Any contrary answer? No, 1,250 pips. 1,250 pips. No, any contrary answer? No. That one is off. So the answer is 108.48. This is the new value. So on this note, are we safe to say that 1 pip for those currencies that have 2 decimal points, are we safe to say that 1 pip is equal to 0.01? Is this correct? Is it safe to say that 2 pip equal to 0.02? Correct? What of 12 pips? 0.12. What of 125 pips? 0.125. 0.125. What of 1,250 pips? 12.5. Any question? Any question? Okay, no, this is 1,000. We're good to go, right? Okay. Now, I already gave a summary of the calculation. This is exactly what I just taught you now. So 1 pip 0.0001, 2 pip 0.00002. You understand? That's simple. So what is a spread? Now, this is another measure of calculation in Forex. Spread. Okay? There's no much because this is another aspect where anytime I try to explain it sincerely, it becomes hard to understand. So spread is very simple. The difference between a bid price and an ask price is spread. If you buy a good, let me just give you the practical example of it. If I buy this shirt for 1,000, if I want to make money, I can't buy it for 2,000. I can't sell it for 1,000. I'll have to add, let's say 200, sell it for 1,200. Is that correct? So the ask and the bid is simply between is the price that the broker is getting from the liquidity, the difference of it, with the price is offering you. You understand? Because of course they'll have to make money. This is one of the ways they make their money, by spread. This is one of the ways they make their money. Spread. You get it? Good. So it's also called a transaction cost. Okay? Ask price is the price at which the broker is willing to buy a currency quote from you. The bid is the price at which the broker is willing to sell a currency quote to you. Okay? So I did say brokers make their money via spread. So let's keep going. Now, this is lot size. If you understand PEEP and if you understand lot size, I think we are good to go. We are good to every other thing we have to do today will just be like a walkover. Okay? Now, for every trade you take, it must have a lot size. Every trade you take must have a lot size. You understand? Most times, people try to explain lot size with, let's say you want to buy a carton of water. You can either buy a carton of water that is by 20. For example, what we use in my house is Seaway. There is Seaway by 12. There is Seaway by 20. You understand? And you can also buy single. You understand? So lot size is simply the amount you're willing to risk for every single trade. It's used to calculate your risk. You understand? Now, there are classes of lot sizes. There's standard, there's mini, there's micro, there is nano. You understand? Now, for a standard, let's start from a nano lot size. A nano lot size is a 0.001 lot size. Most brokers don't offer nano lot size. The broker that I know that offers nano lot is like Deriv. Can get 0.001 lot size on volatility 75. Okay? But most brokers don't really offer it. Okay? So most brokers start from micro, which is 0.01. 0.01 lot size means that for every 1 pip, remember we told you that this is 1 pip. When this thing moves from 0.8680 to 0.8681, it has moved 1 pip. So if your trade, you enter that trade with 0.01 lot size, it means that for every pip, you're making $0.01. If your market moves 1 pip, you make $0.01. If it moves another pip, you make $0.01. So how many pips does the market need to make for you to make $1 if you are using 0.01 lot size? Eh? How can it be 100 pips? For every pip the market moves, you're making $0.1. 10 pips. Sorry, bro, we're out of chairs. You can just sit down on top of this chair. Just sit down on top of the table there. Shift for him so he can face this way. Okay, bring those 2 chairs inside my office. So now that's it for micro. Now for mini, it means mini is 0.1 lot size. It means that for every 1 pip, you're making $1. So how many pips does the market need to make for you to make $30? 30 pips. Easy to understand, right? Any question? Any question? For those online, any question? Please, for those online, if you have any question, please feel free to ask. Somebody said, explain the fourth decimal point again. That will take us backwards. But you can always move the video back now. You have advantage. It's a lot of energy talking, I'm telling you. So, standard lot size is 1.0 lot size. It simply means $10 per pip. That means if the market moves 10 pips, how much are you making? $100. Now let's do practical now. This is a practical class now. So for those online, please join us in this practical. Now the practical is this. Let's use a 4 decimal point. Let's assume Euro card is 1.2950. If we are using a 0.01 lot size, how many, this is now X, how many pips would give us $15? How many pips will give us 50? We are using a 0.01 lot size. 0.01. So how many pips does the market need to move for us to have made $15? Oh, about 150. It's like I'm not a very... I like the I like 0.01. How many pips does the market need to move for us to make $15? It's like a mathematician. Those in favor of 150, raise your hand. $150. Okay. $150, raise your. If you're saying $150, raise your hand. Okay. How many? 150. How many? 150. How many pips? 1,500. Okay. You, how many pips? 1,500. Okay, let's do the calculation. See, calculating this thing is actually very, very easy. You understand? Very easy. Let me open a fresh page so that is 1.2950, right? 1.2950. We're using 0.01 lot size. And we want to find X. And X is equal to $15, right? I'm trying to find how many pips will give us $15. It's very simple. Remember that 0.01, if you're using 0.01, each pip is $0.1. Each pip, $0.1. That means 10 pips is how much? $1. So how many pips will give us $15? Which is $150. So what will get X here is 150 pips. Is it understandable? Now, there's a very simple way to do this calculation that you don't even need to go, you don't need to go far to understand it. When you're using a lot size of 1.0, okay? If your lot size is 1.0, to simply know the dollar per pip, simply move the decimal point one place. you get $10 per pip. For mini lot size, 0.1. You move the lot size, the decimal point one place. What do we have? $1 per pip. Per pip. Per pip. For 0.01, what do we have? 0. Yes, 10 cents, which is $0.1 per pip. Nano lot size, 0.001. What do we have per pip? 0.01 per pip. Simple to understand. Is it not simple enough? Now, another thing worthy of note is that this 1.0 does not always mean that it must be 1.0. It can be 2.0. It can be 3.0. It can be 3.5. Your attention is on the position of the decimal. If this is 3.5, is this standard or mini or micro lot size? Fantastic. If we're using 0.35, is this standard, mini or micro? Mini. If we're using 0.05, which excellent. So your attention is on the position of the, you understand? So this can actually be 20.0. 20.0 lot size. This is another assignment now. We're using 20 lots, 20.0. The market price is 0.9251. And the market has moved to 0.9231. And for this trade, we're on a buy. First question, are we on profit or loss? Are we on profit or loss? Any contrary answer? Any contrary answer? Let me rephrase the question so we understand it, okay? This is where we entered the trade. We entered the trade at 0.9251. And the market has moved to 0.9231. We entered buy here. This is where the market is now. Are we on profit or on loss? Why are we on loss?
Because it has already decreased from 9251 to 9231.
Exactly. 20 pips. Excellent. Very excellent. Very excellent. So we're on loss. Now, the answer is loss. The question is, how much loss? We're entering with lot 220.0. So how much loss are we making? Keep your answers coming. Okay, so for those saying 400, raise your hand. $400. 400. Raise your hand. Well, let me count. $400. 1, 2, 3, 4, 5, 6, 7. For those saying $4,000, raise your hand. $4,000. Some people are not doing anything. 4,000, 4,000, 4,000. Okay. We are on a loss of 4,000. We're on a $4,000 loss. Why? Because, now listen very carefully. Like he said, how many pips loss are we on now? 20 pips loss. What is the dollar per pip for this? How do we calculate it first of all?
20 times 10 times.
No, first, no, don't jump. This is $20 lot. How much dollar per pip is this?
$10.
No. We are calculating this lot size now. How many dollar per pip? Who is even saying 20? Where have you been? You're moving these decimal points here. So you're getting 200. You're getting 200. So multiply $200 per pip by 20 pips. $4,000. Let me give another assignment now. Let me be sure that everybody is following. After this class, we'll score GP. Anybody below anybody below 3.5 GP? You're not coming tomorrow. No seat for you. Okay, let's do it again now. Now, we're entering with a lot size of 3.5. These are our lot size. And we went in for a sell at 0.2903. This is our entry. This is where we enter the market. And at this moment, the market is at 0.2853. This is where the market is currently. Okay? And we entered with 3.5. First question, are we on profit or loss? Profit, raise your hand. Okay? Bring your hand down. Loss, raise your hand. Some people are not even raising. Okay? Let me check with those online. Okay? Thank God is saying profit. That's excellent. Who else? So are we on profit? Are we agreeing on? We're on profit. Fantastic. We are on profit. Okay. Now, second question is how much profit? Okay, that's good. Okay, people online are saying Talent is saying profit, Victor is saying profit, Usman profit, somebody is saying zoom in. Okay, so how much profit are we on now? Okay, so somebody said I heard somebody said 1,750, and that said 7. Okay, I heard somebody say 17,500. Those saying 1,750, raise your hand. Okay, those saying 17,500, raise your hand. 17,500, raise your hand. You didn't raise hand for anything. Okay, just the two of you. AK, mark their face. Don't allow them come here tomorrow. They are better than those that don't allow them come here tomorrow. This is a very simple mathematics. This doesn't take more than 10 seconds to calculate. You understand? Because once you can be able to calculate how many per pip, just multiply it. 3.5 is that's $35 per pip. And we're on a profit of 50 pips here. So when you multiply 35 times 50, what do you have? 1,750. Simple. Are we good to go now? So let's move. Introduction to charts. We've all seen something like this. I told you people, those that came much early, I told you guys that A chart is simply a representation of the price of a currency against time. And trading is the exchange of a currency for another currency at a given price and at a given time. So there must be time and there must be price. So when you plot a graph against time and price, and time, it gives you a chart. Is that correct? Are we good to go? Good. Market highs and lows. This doesn't call for much explanation. I'm trying to rush now because we have 10 models. We are barely at number 5. And we need to get to 7. If we must complete this training tomorrow, and we must complete it tomorrow, whether we like it or not. Okay. So we need to get to at least model 7 or 6. So this is market high. When you've heard them say markets at all-time high, all-time low, all those kind of English, it simply means that it's at the highest point it has ever gotten to within a particular time. So this is the all-time high this is the 26th of, I don't know whether the month this is, okay? This is 26th and 27th. So this is a full day. So for this day, the high of this market is this point. The low is this point. So from what I've taught you so far, within this time, the market, is this an uptrend or a downtrend? Excellent. Okay. Any question? Okay. So let's keep going. Now, there are three types of chart representation. You will notice these are like the most prevalent. We have the line chart, the bar chart, and the candlestick. This one I showed you is this is a candlestick. Okay, I'll come to that. But before market evolved to all of that, it used to be a line chart. We all did physics in school. In physics, when you plot time against what maybe velocity against, I didn't like physics, man. When we all did, but not everybody loved it. Okay, none of us. Okay. So when you plot velocity against this one or that one, you now get a line graph. Okay. Then you now remove error due to parallax. So that's how we get a line chart. So when you plot a graph of this against the price and just put it directly like that, you get a line chart. But they now evolved to bar chart. A bar chart is very simple. A bar chart gives you 4 informations about a particular chart. Okay? It gives you the open. There are 4 informations: open, close, high, and number 4, low. So when plotting a bar chart, okay, I need to explain this for you to understand candlestick. If not, I would have just jumped to candlestick because this is where we are going to ultimately, but you need to understand this first. For a bar chart, okay, if each of this thing you're seeing here is representative of a particular time frame. It can be a 1 hour, it can be a 4 hours, it can be a day, it can be 1 month, it can be weekly. That means that this simple thing you're seeing here, can be used to represent what happened on a particular currency pair in 1 day or in 1 hour. So this is the 4 information that this is telling you. Open is where the market opened. If let's assume this is a representation, I think I need okay, let's do this. Can everyone see this part of the page? Now, if let's assume this is a 1 hour, this is a 1 hour. That means this thing we are seeing here is a representation of what happened in, for example, Euro USD between 2 p.m. and 3 p.m. Between 2 p.m. and 3 p.m., this is what happened. Now, the open of this means that as at 2.00 p.m., the price of this market was here. We can trace, if this is the chart here, the price of this market was here. This is the open. And within 2 p.m. to 3 p.m., the highest place that this market got to was here. This becomes the high. This is high. This is open. And the lowest that the price ever got to within this time frame is here. This becomes the low. And when the market now finally closed at 3 p.m. on the dot, this is where the price was. This becomes close. Is there any confusion here? Any confusion here? Go ahead. Okay. Yes, it's saying something. For this, the market opened higher here, closed lower here. Did it buy or sell? Eh? Sell, sell. Say it confidently if you're saying sell. Okay, let's assume the market opened here, closed here. Did it buy or sell? Do you understand it now? Now, let's move to candlestick. Now, candlestick is exactly the same thing as bar chart. It's just that it gives you the information much more faster. Very simple. This is, let's assume this is a chart now. Now, what, because he was a Japanese guy, I can't remember, I used to know his name, but I don't know his name again. The guy that invented or came up with this, this chart did something quite simple. He simply just added a body to this thing. Now, this is what you typically call a bullish candle. This is what you call a bearish candle. This is also a bearish candle. This is also a bearish candle. This right here is a bullish candle. This is also a bullish candle. This one is a bearish candle. Does this now look like that? So what a bar chart tells you is exactly the same thing a candlestick is telling you. But the good news is that it now has colors. So when you see a red candle, you just know that it's going down. If it's a blue candle, you just know it's going up. In as much as the color is dependent on you, because some people, some very weird people, they can choose black. They can choose black for maybe going down and red for going up. That's their own style. But generally, a blue candle means it's going up. Red candle means the price went down within that hour. So if this is a 1 hour time frame, it means that this here is between 2 p.m. to 3 p.m. This one, 3 p.m. to 4 p.m. This one, 4 p.m. to 5, 5 p.m. to 6, 6 to 7, 7 to 8 p.m., 9 p.m. to 10 p.m. If this is a 1 hour time frame, H1. If this was a 4 hour time frame, this would typically mean this is from 11 p.m. to 3 p.m. This one is from 3 p.m. to 3 p.m. to 7 p.m. Then 7 p.m. to 11 p.m. 11 p.m. to 3 a.m. You understand? So that's why we have different time frames in trading. Okay, so for each time frame, each candlestick is representative of that time frame. Is that correct? Are we good? Are we good? Any question? Any question? Online, offline? Any question? Okay, we're model 5. That's good news. Okay, now we're now going to enter candlestick because this is where your analysis starts. I think we'll stop at model 6. We've already covered enough grounds. It's the basics. So a bullish candle is simply a candle that has a high, the close higher than the open. Okay, I've already explained that. This is where the market opened, and this is where the market opened here and closed here. For a bearish candle, the market opened high and closed lower. You understand? Now, there's something called chart patterns. Okay, chart patterns are simply patterns of charts that you will see that are indicative of a particular market behavior. You understand? For instance, there are different kinds of chart patterns. I think I have some pictures here. I think the pictures are below, but we'll have to just do with candlestick patterns before that. So let's just do with candlestick pattern. There are different candlestick patterns. Every candlestick pattern, I wish I had more time to explain what I'm about to say now, but let's keep it. Let's keep going. I wish I had more time to explain what I want to explain now because it's necessary to understand it. Every candlestick tells you a story. Okay? That's the way I explain it to our students here. Every candlestick you see tells you a story. Most of the reason why traders lose money is because they are not considering the story part of the chart. They are seeing the chart, they are approaching it only from a technical aspect of it. They are not considering that this thing you're seeing here is a story. Should I tell you the story here? It's a very simple story. The story is that this is 2 p.m. This is 2 p.m. here. This is 10 p.m. The story here is that between 2 p.m. and 4 p.m., there was a very massive power toss between the buyers and the sellers. The buyers came in. This is a story now. The buyers came in. They were having fun. And all of a sudden, they are now being challenged by sellers. Now, as at 4 p.m., the sellers overtook the buyers. They overpowered them, and they took authority from the buyers and moved the market down to this point. Between 5 p.m. and 6 p.m., the sellers were still dominating the buyers. Now, it was at 6 p.m. that the buyers now recovered strength and overpowered the sellers. This is what you call engulfing pattern. But this is the story behind it. The buyers overpowered the sellers between 6 p.m. and 7 p.m. and continued overpowering them up until 8 p.m. But as of 8 p.m., they got exhausted and the sellers took over again. This is a typical story. Does it sound like a good story? But this is simply me interpreting what is happening here.
So every chart, every candlestick pattern you're seeing is actually telling you a story. So most times, why traders lose money is because they don't understand the story. So they are only using the technical approach to it without understanding the story behind it. I was teaching some of our students here before you guys came in that no, that one is complex. Forget it. Forget it. There is market exhaustion and there is market breathing. There's when the market is breathing and there's when the market is exhausted. Those are two different terms. But forget it, like I said. So now, these are examples of candlestick patterns that, very popular candlestick pattern. There's a hammer pattern, there is doji. When there's a doji, this is another story. What's the story here? This one, it doesn't even need much. What's the story here? No, don't say indecision. You people like technical terms. Exactly. That's what I want to hear because that's like the real story. The story is that there was a fight here between the buyers and the sellers. And at the end of the fight, nobody won. You understand? Good. Which in which one? It's very clear here now. Which one? This one. This is a mistake. Don't mind this. This is bias. This is a mistake. We've corrected it in the main, the one we give out. This is like the old PDF I'm using. It's buyers, not sellers. So at this point, the sellers push this market. This, of course, this is where the market opened. This is where the market opened. The sellers pushed the market all the way down, but the buyers were able to overpower them and move it higher than the market even opened. So who is in control here? Buyers. So every candlestick you're seeing tells you a story. What's the story here? Buyers overpowered sellers. Okay, so let's keep going. Now, these are different. I'm not going to explain all this, but they are different. There are more than 100 candlestick patterns. There are single candlestick patterns. There are double candlestick patterns. There are multiple candlestick patterns. In the sense that, for instance, for something like this is just one. Just this one candlestick. You understand? But there are some that you need two. For example, this one. There are some that takes like three to form. I don't think I have any example of Morningstar. Exactly, good. Morningstar, Evening Star, those are patterns that take three candlesticks to form. Okay. Now, types of chart patterns. Types of chart patterns. Now, these are examples of some of the chart patterns available in the Forex market. This is not in any way exhaustive. Okay. This is just a mere example. We have there are some that will place more emphasis on in the academy. Okay. Like the head and shoulders pattern, like double top. Which other one? Triple top too, or triple bottom, anyone. But a candlestick, well, these are chart patterns, not candlestick patterns. There's a lot of mistakes on this particular page. These examples of chart patterns, not candlestick patterns. Okay, so please take note of that. So there are many, there are more than this. Okay, but this is just for example, right? Now, I've already explained what is time frame analysis. I already told you what is time frame. Each of these candlestick can represent a particular, number of hours, depending on what it is. Okay, in this case, this is a daily time frame. That means each candlestick here is 1 day. Each candlestick here is 1 day. You understand? But when you zoom in, inside this one candle, you can get all these candles. This is 1, 2, 3, 4, 5, 6, 7. It is 1 hour each. So this thing you're seeing here is this particular candle. Let me check which of them is this red one, right? Are we correct? Because this is the open and this is the close. Is this one here? What I'm actually going to teach is very simple. You can zoom in, okay? A one-day candle can be divided into 12, 24 one-hour candles, okay? A one-day candle can be divided into 6 4-hour candles, right? There are, how many 4 hours are there in one day? 6. So you can get 6 4-hour candles inside one single daily candle. Let's just do a very quick assignment now. Now this is, okay, let me use this. If we divide this, if this is a daily candle, if we divide this into, okay, let's not go too far so we don't, let's say this is a H1 candle. If we divide this into two 30 minutes candles, what are we likely to get? 230 minutes, what will it look like? Huh? Two candles, like what would they look like? Considering this week, remember there is a week here. Eh? This is 1 hour. We are dividing it into two 30 minutes candles. So what do you think those candles will look like? Yes, you are thinking. This is what it will likely look like. If this is a 1 hour candle, it will likely look like this. This is what it will likely look like. Because this blue candle is this week for the first candle. Then the sellers now came in, overpowered the buyers. And we now have this as a H1. Any confusion here? Ask question. If you want to ask question, ask question. Yes, it's a bearish engulfing. It's a bearish engulfing. Okay? So let's move. Now, introduction to support and resistance. Now, we are now entering into the very practical aspect of trading. Support and resistance. Now, there are different theories. This is where it's I just hope it doesn't get too confusing. But there are different theories that people come up with in the Forex market that enables them to make a trading decision. Support and resistance theory is just one out of the theories. Just one. There are theories, there are some that have, like, a lot of people just have different approaches to the market. Some make their trading decisions only based on market highs and lows. You hear people, they will tell you, okay, it has cleared the Asian high. And we are now approaching the UK Open. That's their own, they have their own theory. Some, their own, they'll tell you, okay, we are using smart money concept, SMC, that we are trading as institutions. Some say supply and demand. They tell you this is a supply zone, this is a demand zone. But at the end of the day, all those theories all boils down to support and resistance. Because at the end of the day, this is what the chart actually looks like. Because when the market wants to go, let's say wants to go down, it never just goes straight down like this. It will do something like this. If it wants to go up, it will go something like this. You understand? So at the end of the day, this is how to actually approach, like the best approach to. If you approach the market with a support and resistance standpoint, you almost never be wrong. So whether somebody is using supply and demand to explain it, or using smart money concept to explain it, or using market highs and lows, or even pivot points to explain it, you will still be right. So as far as all the theories and stipulations about the Forex market is concerned, approach with support and resistance always stands out. It's always the best. Anytime, anywhere. Are we together? Fantastic. So let's keep going. Now, this is a theory, okay? It's a theory that suggests that possible areas of the chart that is a theory that suggests possible areas of a chart or price where there will either be surplus of buyers or surplus of sellers, okay? In this case, as you can see, this was a support. It simply means that when the market was at this point, there were more buyers here than sellers. That was why this market moved up, okay? And when the market came here, there were more sellers, and that was why the market moved down. And what do we have here? More buyers or more sellers? Market move. What do we have here? Good. So the theory also suggests that a support can become resistance and a resistance can become support. See it as this way. A house that has a roof. You understand? The roof is the resistance. The ground floor is the support. So the theory is saying that when a resistance zone, which is this, becomes broken, if the market comes back to that place, this place that was resistance will likely now become support. That's the theory, okay? Like I said, this is simply a theory. And from what you should know about theories, they can be broken at any time. You understand? Good. So let's keep going. Okay, this is the summary. And I said a good knowledge of support and resistance theory and its practical application in the market can make all the difference in your trading experience. Okay, supply zone is supposed to usually a good place to buy a currency pair, while in the resistance zone is a good place to sell. Very simple, right? Okay, so I think we're done with model 1. So we'll just move to model 2. We'll just take is that the battery is low? How many percent? 20. How many? If it's 20%, you can do to the end. We'll just do just model 6. 20%, yeah, you can do. Now, introduction to trading terminals. We're now getting much more practical now. We're getting more practical. So now there are two major terminals, two major softwares that people use when trading Forex. Number one is the MetaTrader 4 platform and the TradingView platform. That's like the platform that most people use, okay? The TradingView platform and the MetaTrader 4 platform. MetaTrader 4 platform is a smartphone application that people use to apply their trade, use to open trade and close trade. Anybody doesn't know what is MetaTrader 4 here? Everybody knows what. Is that? Okay, just knew about it yesterday. Okay. Any other person? Okay. Is that? Okay, you've only heard. Okay, okay. So this is where all the action is being made. This is where all the action happens. Okay? You need a platform to execute your trades. Okay, and we advise MetaTrader 4 and TradingView. TradingView is usually for analysis because it's a more sophisticated platform. There's a lot of analysis you can do using TradingView. So the way I do it, I do my analysis on TradingView, then execute the trades on MetaTrader 4. Personally, that's the way I do it. Okay, for some people, they execute their trades on TradingView, fine for them. But I love watching my trades on my phone. Okay, for some people, they don't even like, they like opening the trade only on laptop. Anything that works for you is fine. Okay. Okay, so MetaTrader 4 platform can be downloaded from any any broker's website. Depends on the website, depends on the broker you're working with. You can download their own MetaTrader 4 platform on PC. Okay, because there is PC version and there is also a smartphone version. Even for TradingView, there's a smartphone version and there's a PC version. Okay, so when you download it, for some TradingView, they have both free and paid. I use the paid one, but you can also use the free one. Now, the desktop versions of both are much complicated and sophisticated. Yeah, the most traders use TradingView's desktop software for analysis and execute their trading positions with MetaTrader 4. That's what I've already explained to you. Okay, so we'll just explain the pages available on Meta. So if you don't have MetaTrader 4, this is now practical. Download MetaTrader 4 now, or from Google Play Store or from Apple Store. It was removed from Apple Store, but it's back now, so you can download it. So download it now. Let's do a bit practical. This is the last thing we'll discuss today. Then that will be all for today. Now, if you open the, huh?
I want to know what are the benefits of the benefits of purchasing.
Okay. Okay. For the free one, you are limited. There is a limited number of indicators you can use on the screen. You can't use the replay feature, which is like one of the most important features as far as I'm concerned. Because if you must backtest your strategy, which I do almost every day, you need a replay button. Okay. Then also you can't put more than one alert. I use alert because I will not always be on my laptop. So I want to tell the software, if the price gets to this particular point, send me an alert. So they'll send me an email and also a push notification on my phone. So if the price gets to the place where I'm interested in entering, I get an email. So I now know, even if whatever I'm doing, maybe I'm just maybe spending time with my wife or going out or doing anything, once I get the email, I know that I have to check my phone or my laptop. You get it? So that's another feature that is very important to me. So there are some other things, multi-screen. For the free one, you can only do, I think, one screen or so. But on the paid version, you can put like 4 screens. You can put like 4 charts and be watching all of them together, which I rarely do. So the most important thing for me there is just the alert and the replay. That's all. But you can use the free version for as long as you can, and you'll still be making money. No stress.
And the free version,
No, it can, but you can't change the time frame. You can only replay on a particular time frame. By the time I start giving you guys the strategy tomorrow, you know why. By the time I start giving you guys strategy tomorrow, you will know why I prefer it. Because if you're using the replay button, I can check 4 hours, go back, scroll back to 2003, check 4 hours, then switch it to 1 hour time frame, and it's still on that 2003. But if you're using the free version, you can't even switch. You can only check on one. You can't go backwards much. I think you can't stretch more than 6 months or so. But you can use the free one, of course. But the paid one is not much, about 8,000 or so. I don't know. In a month, yes, it's not down. Yes, something around. I don't know. Like, it's automated or so in my own system, but I think it's about $14. It's about $14 per month. But if you're paying for 1 year, I think you have a discount. I don't know. Mine is automated, so but I think it's about 8,000. I'm not so sure. So let's go. MetaTrader 4. There are 6 pages of MetaTrader 4. This is the quotes page. This is where you see the prices and the quotes. Okay, I already explained what this. Everybody has MetaTrader 4, right? So this is the quote page. This is what it looks like. It shows you the price, the highs and the low, and also the spread. The spread, I told you, is the difference between how much the broker is getting the currency and difference of how much is getting and how much is giving you. Yes, open a demo account. Once you enter it will prompt you to open a demo account. So just open it. You can be testing, just be playing around it. It was this, let me tell you, let me tell you a funny story. It was this MetaTrader 4 that made me like really be interested in Forex. The first day I went for a seminar, was in the seminar they told us to download MetaTrader 4. So, and they told us, okay, when you click here, it goes buy. If you click here, it goes sell. So the guy now said, okay, that we should test it. So me, I didn't even know anything. I just clicked something, click, entered, I don't know, maybe about 10.0 lot size or so. So, so the thing now went up. And after like few minutes, I closed out. Saw like $800. So I called the guy I closed. I said, come on. I told him, so wait, if this was real money, I've made $800 now. He said yes. I said, say no more. I said, say no more. You have said enough. That's all. Go home now. I can take it from here. So it was there when I knew that this is life. So I asked him, so this is like this price changing now. It's like the current price globally, like everybody's watching this thing too. He said, yes. I said, that's all. That's all. You can go now. Okay. So that's code page. Now there are two other pages. This is the chart page. Okay. This is the chart page where you now see what you're doing. This is where you see the charts, the representation. Like I told you, this is price here, and this is time here. Okay. So for this case now, are we on profit on this? This buy 0.24. Are we on profit on loss? Are we on loss? Assuming that this is 20 pips loss, how much loss are we making? 0.24 lot size. Let me refresh our brain, sharp, sharp. 0.24 lot size. 0.24 lot size. We are on 25 pips loss. How much are we losing? This is 0.24.
How many pips?
25 pips lots. How did you get $60? How did you get $60?
That's $2.4 times
2.4 times 25, and you got 60. That's excellent. So that's correct. So let's keep going. So there's a trade page, which is this third page. This is where you see the trades currently ongoing. Okay. So this here you see the balance, the equity, the free margin, margin level, and margin. It's a bit confusing to explain, but I'll attempt it. Now, balance is how much your capital is, how much you currently have. Equity is how much you have when what you are making or what you are losing is being deducted. In a trade, when you enter a trade, until you exit the trade, you've not made profit, you've not made loss. So as far as this minus $307 you're seeing here, it has not been deducted from my capital. But if I decide to close this trade now, they deduct this $307 from my capital, and my capital, which is the balance, now reduces. You understand? So for now, it's just at equity level. So when you remove this $300 from my balance, we have equity. You understand? But if we are on profit, you will see that this equity value will be higher than this balance. You understand it now? Are we good to proceed? Fantastic. So free margin is how much of your money do you still have if you want to enter multiple trades? Because you can enter as much as 100 trades. Even more than 100. So if I enter this trade, as you can see, this one is on Euro card, NZD card, AUD card, NZD card, NZD card. If we enter this trade, and every trade you enter, they keep a part of your money called margin. They keep a part of your money called margin. So all the margin they kept for each of these trades, depending on the lot size, is what we call margin. So for instance, if you enter a trade with 1.0 lot size, maybe they can keep a margin of, let's say $50. The reason why they do that is because brokers are trying to protect themselves too, in as much as they're trying to make money. Okay, especially brokers that are book brokers. I won't go into the explanation. But the thing is, for you not to lose a trade so much that it becomes a negative on them, Because when you put a money to a brokerage account, which is your trading account, the implication of it in quotes is that you are trading with their money. You get it? So for them not to, for an instance now, you can enter a trade because sometimes this thing can move very sharp. You can enter a trade and it quickly just moves down, just goes to a loss and over maybe blows your account. Have you not seen blown account that is a minus? You've not blown account and it enters minus. That means you are owing. People have not been in this market for long. You can blow an account and you're owing the broker. If you fund, they collect their money first. so, so sometimes to avoid some of those things, that's why they are keeping margin. So that at least your trade has room to breathe, even if it goes sharply or negative. You understand? So when you subtract the margin from your balance, that's where you now get free margin. From equity, sorry, not balance. From equity. When you subtract margin from equity, then you now get free margin. So free margin is how much of your money you still have to trade if you still want to take more trades. You understand it now? Any question on that end?
What about the margin level?
Margin level, don't worry, it will confuse you. That one will scatter your head. Just forget it. But you don't need it for any calculation. Okay? But there's a level, just know that there's a level your margin level will get, then you get a margin call. Margin call, yes, is for margin call. For some, it's 50%. For some, 30%. You get a margin call. There's a level of loss you'll be. The broker has to close you out. If not, you are now entering his money. You understand? So they'll have to liquidate your trade. Liquidation, aka blow. Yeah.
The other slide you just moved on now,
Okay.
That's the first one where we have the codes. I'm sorry, not the codes. The third one. I don't know what you call it. After the charts. We have
This one?
The one you just passed now.
Okay.
The one by the right. Yeah.
Okay, trade.
Yeah, we are seeing SD, the NDZ card.
NZD card, yes.
And you have like two of it. That one can enter
Yes.
two
Yes.
the same
Exactly.
currency.
Yes. You can enter
Different prices or
different, but even the same price. You can enter as many multiple for the same trading currency pair. Yeah.
any different
Mm.
demo from the same.
Yes, there's a difference because if you're taking a demo from a broker, the demo from the broker is giving you a more friendly, a more similar trading environment with what the live account of that broker will look like. You understand? Because every broker offers different spread, different trading, even trading currency pairs. You get? So it's only on demo that you can test what the particular broker is offering. For some brokers, this thing you're seeing as spread here on Eurocard. On FXTM, Eurocard spread is like 50 something pips. Like 5.6 pips practically, okay? But don't they put it as 26, but this is actually 2.6 pips. So on FXTM is like 5.6 something. You understand? This one you're seeing Euro USD 2.1 pips. On equity, I think is about 1 point something, 1.2 pips. So different brokers with different their own their own offering, their own bid, their own ask price, their own spread. So when you get a demo from the broker, it's a much more friendly environment to what you see if you're actually taking the real account. Any question? Any other question? Okay, so the fourth page is the result page. This is where you see the results of your trades, okay? Whether you ended a profit or a loss. This is where you see it. Now, there's a news page. This is where you see the news events that are moving the market. You understand? This is where you see the news events that are moving the market. Like this one, South Korea GDP surprise to the upside in Q3 UOB. If this was a Nigerian, you will hear Buhari shocked. Then the federal government expresses shock. So okay, then this last one, no need to explain it, is a community page. If you are part of the MQL4 community, this is where you come to log in. If you have messages, email messages too. Okay, so types of market order. I think this should be the last. Wow. Wow. Hey. We still have some things here. Okay, market order. Market order is simply when you enter a trade, whether you buy or sell, and the broker immediately puts you into the trade. Then pending orders. God, are you sure we can discuss this pending orders today? Because I don't want to rush it. Anyway, let's see how far we can go. So pending orders are simply when you want to enter a trade, but you don't want to enter immediately. This is an example of what a pending order would typically look like. Now, let's assume this is where the market is. You are interested in entering this Euro USD market, but this is not where you want to enter. You want to enter when the market gets to this point. This is where you want to enter. So when you put a pending order, you're telling the broker that you want to enter this market, but don't put me to this market immediately. Allow this market to come to this point before you put me. It can be up, it can also be down. That's just an example of pending order. Okay? So you can tell the market, for instance, if it's a buy limit order, if the market comes down to your price, the broker enters you for a buy. If it's a sell limit order, if the market goes up to your price, it puts you in for a sell. So that's it for buy limit and sell limit. Now for sell stop is when you put a sell stop, you're telling the broker that you want to enter the market when the price goes up. You want to go in for a buy here. If it's a sell, if the market goes down, comes to this point, put me in for a sell. That's simple. Any question on this? I would have loved to explain it more, but we are pressed for time. 10%. Okay, let's finish up. So how to play? Okay, I'll teach how to place position tomorrow. Please remind me that I skipped that one so that I don't forget it. I've already taught you what is spread. There are different ways brokers make money. They make money based on spread. You understand? That's why when you open a trade, it always opens on loss because they are charging you for spread. Okay, they will charge you for the spread upfront. So this one is not that you owe them. So whether you make money or not on the trade, you've collected spread. Okay. Commission, that's another way they broke, because some brokers offer commission. They charge back for commission instead of spread. So that way, for every lot size you open, they charge a particular amount on it. Let's assume you open a 1.0 trade, they can charge you, let's say, $1.2. You understand? That way you're also paying upfront. So whether the trade goes on profit or loss, they'll collect their $1.2. That's for commission. Now there is swap fees. Swap fees is when you leave a trade overnight, they charge you for swap. Although some swap fees can actually be positive. I don't know how they calculate that thing, but for some swap actually positive, but most are actually negative. So when you leave your trade overnight, the charge is minimal. It's not even considerable. The good news about Forex trading is that even with a strategy that makes money 40% of the time, you can still be profitable. That means if you take 10 trades, you lose 6 and win only 4, you can still make money. In fact, with a strategy that has 30% win rate, you can still make money. That means if you take 10 trades, you lose 7, win only 3, you can be profitable. Let me tell you how. Let's use, for example, 30%, a 30% win rate. And we have a $1,000 account. 70%, 30%. 30% is win. But each time we win, each trade, we are risking $100. We're risking $100 per trade because you choose how much you want to risk for every single trade, okay? So if you have a strategy that wins 30% of the time and you're risking $100, that means if okay, let's say the strategy has 30% and your win rate is 2.5:1, or let's say 3:1. That's if you win, you make $300. If you lose $100. So in this case, if our strategy wins 30% and we take 10 trades, that means we only win 3 times. That 3 times 300, 300, 300. But the times we lose $100. So we lose 100 times 7 times. 700. 300 times 3 times. Are we on profit or on loss? So even with a strategy that has a win rate of 30%, you can still be profitable. And the good news about trading is that you can even do 1:10, risking $100 to make $1,000. Did I tell you guys here how somebody raised $10,000 to $1.2 million? So anything is possible in this market. Highly possible. So even if you have a win rate that is very low, you can still make money. The good news about what we are teaching, giving you guys, is that the win rate of the strategy that we're teaching people tomorrow has a win rate of 65%. 65%. That means if you do what we teach you tomorrow, 65% of the time you will make profit. How many of you are excited about tomorrow? So it's a very simple strategy. So please, tomorrow we are starting at exactly 2 o'clock, and there will be a lot more people here tomorrow. So I advise you people that were here early, come early tomorrow. Come early tomorrow so that you don't miss out, because tomorrow is where we'll be teaching the main thing. Okay, there's a lot to learn, and we're just compressing this for time. Okay, now what I taught you is, like I said, this is something that will probably, with the tutorials and the training that we give us, it will probably take you like 2 weeks to really go through it. So we have everything I taught you here pre-recorded. You understand? I was rushing some things because of time, but we have our student package is such that you can refer to them at any time. At any time, you can rewatch the videos as many times as you want. Okay? But what we are teaching you tomorrow, because most times when people come for trainings, they don't believe. There was a lady that came here. She couldn't believe that we actually taught the strategy for free. She couldn't just believe that. It was too hard to believe that we actually taught it for free. Because the truth is, I'm telling you this, no academy or Forex firm, I dare to say in Nigeria, can teach you what we are teaching you here actually for free, if there is no hidden anything behind it. Of course, we're in business, and of course, we want to make money. But the truth is, behind it, I actually want you to become financially profitable. And that is with all sense of sincerity. So whether you decide to join the academy or not, totally fine. Just apply what we teach you. You become profitable trading in the financial market. So please, tomorrow, come early. Okay? Come early. There's a lot to learn. So the brochure you have in your hand is our student packages. It's much more expanded than that. We have a full PDF on that. If you want, maybe you can send it to you on WhatsApp. Or those are our student packages. There's a lot. Maybe tomorrow, after tomorrow's class, I'll explain the packages for you, because our student program is a highly exhaustive program. When I mean exhaustive, there is nothing about Forex that you won't learn. Because we do mentorship classes every single week, every single week, every single week. For now, it's actually a lifetime program, but maybe, I'm not sure yet, it might become like maybe a subscription program, 3 months, 6 months. But for now, every single week, we have a mentorship class for all of our students. So you're free to ask questions, because when you join the academy, we attach a course assistant to you. So somebody would actually, even on the group chat, somebody is checking up. How are you doing? Where are you on the course? Even I myself, every mentorship class, I ask personal questions. Where are you on the course? What are you learning so far? What's the challenge? It becomes much more easy when you have an environment that will enable you to thrive. Okay? But I'll talk more about those packages tomorrow. So see you guys tomorrow. How many of you enjoyed today's class? Wow. And you did not clap. So see you guys tomorrow. Have a wonderful day. All right. Very welcome. We're always open every day. We're open any time from 9 o'clock to 4 p.m. every day. So even if you come before the time. Are you serious? We're open. The office is open for our students. You are very early. So for all our students, everyone that is a member of our academy here, you can always come here to trade. You understand? For now, it's still open, but with time, because we'll probably outgrow this place in the next 3 to 6 months. So we might just be doing it. You have access to the trading floor for, let's say, 3 months. But for now, since we are a little bit few, you can come around anytime here. People are trading here every day. At least it will give you the environment to be motivated to actually trade. But that is only for students, not for free students. It's for members who are fully registered in our academy, can come here. We do analysis here every single day. So we have people on ground. We have people that are working with us, very amazing traders like Marcel, AK, Elijah, a lot of them. So you can come around, you can do analysis. If you have any question, feel free to ask, they will attend to you. So, but that's all for now. My waist is spending me. Please have a wonderful day. For tomorrow. Yes. Before tomorrow. Okay. 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 Go ahead. Go ahead. Okay.
The way your profit will run with that $10 to 10%, it will not be the same way $10,000 will run. And when I started looking at Forex, I discovered that when you put 10,000, when you put $10,
Okay.
and you 0.01,
Okay.
0.1 cent, when you put 100.
No, it depends on lot size. As far as Forex is concerned, it's a matter of lot size. Which lot size you are using.
It doesn't matter how much
Yes, even if you have a $200,000, if you're using 0.01, you'll be getting $0.1 per pip. So it depends. It's not about capital, it's about lot size. Is that okay? Exactly. Exactly.
The brokers, they happy with you.
Why not? If a good broker, see, let me tell you the truth. A good broker is happy you're making money. Sorry, let me just greet these people online. So cheers, guys. Have a wonderful day. Goodbye. Okay.